This is your results summary, and the first thing you'll see is this box on the left-hand side. And after we typed in all that data, what the model can tell you first is what your simple payback is. So this isn't taking into account any cost of financing, although it is taking into account the rebate that we believe you can get for the LED fixtures. That's calculating the simple payback. The stream of benefits, which are your energy and maintenance savings, how long it takes them, plus the rebates to pay back your initial cost. We also now know that your project is expected to cost about $3.6 million. So we didn't know that before. Now we have a rough number of what this project might be expected to cost if you want to replace 10,000 lights using the assumptions that we used. You also have some other numbers here. You have your total annual kilowatt hour savings, so that's annualized. We're not using the escalation factor here. You have your total energy cost savings, so that should actually have a little dollar sign, but that's how much you're saving in terms of your costs that you're not paying to your utility bill, assuming City X owns their streetlights and they're on to a new rate schedule that reflects the lower energy usage of this new technology. And you can also calculate your greenhouse gas emissions reduction. So you see that here. If you want to see how these numbers are calculated, I'm going to scroll over here. This nicely lays out for you the simple cash flow. Year on year, what's happening and how your simple payback was calculated. So each year now, it's showing you you're spending roughly $1.2 million because you're buying your fixtures in 3 years. And you'll see that price going down because we have that 5% decrease in price each year. So that's partly what's driving that. We have your rebate, so that's how much your rebate's worth each year. And you have your energy and maintenance savings. Basically, when you net all those numbers out, you get your cash flow. So that's just showing you basically year on year how those numbers total, and then your cumulative cash flow. And your cumulative cash flow essentially is your payback. So you're just adding up all of your negative numbers, how much you're spending each year, and then how long it takes all those stream of benefits to pay it back. That's what you get with your cumulative cash flow line. So you should see in year 9, that's when it goes positive because you have a roughly 9-year payback. So that's how you can sort of fact check if you want to know how these numbers are adding up. You can do it over here. You don't just have to take the model's word for granted. And then finally, if we scroll down, just one more way to look at your cumulative cash flow, there's a little graph that I just wanted to show you. This is cumulative, so when you're summing up all of the expenditures and the benefits, this just shows you how they work, and again, where it crosses the axis, it should be where your payback is. We found often people just like visuals better, and these are the types of numbers you can take to your city. They're rough numbers still. These are still pretty broad assumptions that we're making, but you can take these types of answers to your city and say, okay, we do have a sense of how much our project would cost, and we do think we know how much energy it would save year on year.